Did you know that in the UK and in the US, small cap stocks have been hiding a little secret from us investors? And I don't think many people know what it is, and it certainly surprised me when I found out.
Oh, I'm not going to tell you now.
Well, here's that secret, and keep it quiet though, don't go telling anyone else. So small cap stocks have and continue to beat the overall stock market across most years and overall across longer periods of time in their returns. And this isn't some strange phenomenon we might find just across a single year. This has happened over long periods of time, and not just in the UK as well. This applies to both the US and the UK. Firstly, in the UK, indexes of small cap stocks have outperformed the FTSE All-Share by a significant margin. Just listen to this research from Paul Marsh and Scott Evans of the London Business School. They've said that over the 66-year history of the index, that's the Numis Smaller Companies Index, the annualised return on the NSCI is now 14.6%, which is 3.4% greater than the annualised return on the large cap oriented FTSE All-Share. In shorter timescales from around 2016 to current day, there's one fund which has already outperformed the market by a whopping 30% to this day, and I'll let you know what fund that is by the end of the video. And things in the US are very similar indeed. In fact, the Russell 2000 index has beaten the returns of the S&P 500 recently, and you'll see that soon in some of the graphs that I'll throw up. And again, just like the UK market, I'll show you at the end which fund you might want to invest in the US if you want to take advantage of this potential growth. So if small caps continue to outperform the market, then why aren't investors speaking about it all the time? All we talk about as investors is the big indices like the S&P 500 and the FTSE 100. So why are we missing a trick here? So what are we missing about small cap stocks? What don't we understand? What are the risks? What are the downsides? Let's have a look now and talk about firstly what we actually mean when we say small cap companies. So firstly, it's quite an interesting definition because by some people's measures, you might not even think some of these companies are really small. Typically, a small cap company is defined by anyone with a market cap of around $2 billion. That's more of a US centric definition. In the UK, typically we're looking around the kind of £1 billion mark and lower. We've certainly got a ton of companies who fit into this category. Now, it'd be very easy to argue that some of these companies probably employ hundreds of people and are already quite large by anyone's stretch of the imagination, and lots of people watching probably already work at these kind of companies, and lots of these brands and lots of these companies could have been established for quite a long time and been running for a long number of years. But let's get into the juicy details. What makes small caps perform so well, and why have they potentially been ignored by a big section of investors and a big section of the market? Well, I think the first answer is it really all comes down to volatility. Small cap stocks are one hell of a ride. As you might imagine, a small company has a huge chance to be able to maybe double or triple its revenue than a very large cap stock company has to also double or triple its revenue given the same amount of time. So for example, it would be much easier, in theory at least, to increase your revenue from £1 billion to maybe £2 billion. Be the same in dollars. And then for example, of course, it would be much harder on the large cap side to go from $1 trillion business to a $2 trillion business. As much as Apple and Microsoft make it look super easy. However, while this juicy upside sounds really good and they can increase their market cap and grow very quickly, that's when market conditions are really good. When market conditions are bad and we have downfalls in the economy, if we look at the financial crisis of 2008 or if we look back just recently to 2020, we'll see that small cap stocks actually are incredibly much more volatile and are less well positioned to weather that storms of the ups and downs of the market. During bad economic conditions, small cap companies lose capital and lose revenue quicker than UK petrol stations lose fuel. Think of it why this might be. Ultimately, those smaller companies burn through cash a lot quicker than the bigger ones, and not only that, of course, those smaller companies tend to have less cash on hand because they're trying to grow quickly. They're reinvesting every bit of capital they've got to make sure they can grow quickly, whereas large companies will tend to have a much bigger cash buffer so they can weather those storms and weather those downturns in the economy. If you take the example of some cash reserves in some very large companies, even the likes of Apple, they could probably run their business for a number of years without even a single dime coming in as revenue, whereas smaller companies may fail after 2, 3, 4 months if they're lucky. Let me just give some examples and give some context. I'll throw up a graph now of the Russell 2000 index versus the S&P 500 in the US. Here's the graph. If we just look at the growth potential, here's what we can see what happens during a good economic cycle and a bad one. As you can see, overall the Russell 2000 beats the S&P 500 in terms of returns, but if we look closely at the dips and the gains, you'll see it's incredibly volatile. Daily average swings in small cap stocks can be incredibly volatile, and anyone logging into their phone as an investor is probably going to be sick by looking at every time, looking at those red numbers when we have a very bad week. And then of course, when things get really bad, what happens is the small cap stocks tend to dip even further than their large counterparts. So for example, in the financial crash, we might not see a 30% dip, we'd see something more like a 40 or a 50% dip. Of course, we get the inverse on the way up, but it's still one hell of a ride, and if you can't stomach that, small caps are not the place for you. And I think this is just one of the reasons, of course, that lots of investors stay away from this side of the market or allocate a much smaller part of their portfolio to small cap. Another reason I think they tend to get ignored is because they are small. So therefore the analysts, the investment bankers, the hedge funds, they're just not interested in putting man hours and putting resources into researching these companies, looking at the fundamentals of their business, because there's just too many of them and they're relatively too small. And in these cases, the risk and reward doesn't really match up because of course the risks of these companies are very much more likely to go zero and go bankrupt, whereas in much larger companies, even in a poor economic climate, they are likely to still be able to weather those storms and actually progress. And secondly, if you are trying to invest large amounts of money, if you are from an institution, for example, putting large amounts of money into small cap stocks could massively move the share price. And in fact, investing large amounts of money into small cap stocks as an institution or as a large investor could move the share price massively. Because of course, we've got a couple of things going on. Number one, of course, we've got the size of the company. And number two, of course, we've got the fact that liquidity is quite low. So your £5-10 million investment could very quickly make you become the largest shareholder, which as an investor is probably not the place you want to be. So depending on which way you want to look at this could be a pro or a con, but what that does do is leave the small caps to investors like you and me to do the hard work and do the due diligence. And on the flip side, obviously, large cap companies don't have the same issue. If you were to buy 10 million, 20 million, 50 million pounds or dollars worth of shares in large companies, you've got the liquidity to do that. And of course, it's not going to move the needle massively, and you won't become the largest shareholder. And finally, just something to be aware of and consider is the fact that those smaller companies will tend not to pay out much in dividends. So if you're looking for an income producing asset, then small caps typically won't be the place to go because any money coming into that business is typically reinvested as they look to grow extremely quickly. Whereas of course on the opposite side, larger companies have much larger cash reserves and much larger piles. They're expected to grow themselves slower, so they can actually pay that out as dividends to the shareholders. So in essence, small cap stocks really are that lifeblood of the economy. They have the possibility to grow extremely quickly, but they're also extremely volatile along the way. I think that there'll be plenty of hidden gems in this space, and if you do your research and you find the right one, you may even be working at one right now. You might find the next 10,000, 20,000x stock. Things like Netflix, for example, or any other disruptive technologies and any other disruptive industries. I'm sure there's going to be some out there. It's up to you to go and find them. And let me know in the comments below if you do. For example, in just a few short years, companies like Etsy, who are now listed on the Nasdaq stock exchange, have come from a small cap company in 2017 to becoming a monster in 2021, with their share price and market cap being around $25 billion. Having said all of that about small caps and the ups and downs, what's the best way to invest in small caps? Well, in my opinion, it wouldn't necessarily be going to try and pick individual companies, although you're very welcome to do that. In my opinion, I would probably invest in small caps through an exchange traded fund that would give me exposure to all the small caps I might want in a very, very large basket. Rather than trying to pick the winners myself, I'd rather have a single investment vehicle and a single ETF I could just dollar cost average into and take advantage of those big returns and those big averages over a very, very long period of time. Now, as I promised at the beginning, I would share a US fund and a UK fund who have done particularly well through these storms, have a relatively low ongoing cost, and might be ones that you might want to get yourself invested into. Just for full disclosure though, I don't currently hold any positions in these. I may in the future, and I certainly would think about exposing myself a bit more to small cap stocks, but please do all of your own research as usual. But let's get into these two now. So if we start over in the US, there's loads of ETFs to choose from, but a great one here and a really good reference one to have a look at is the iShares Russell 2000 ETF. And this has a ticker symbol of IWM. And I'll pop up a comparison graph now showing the IWM performance against the S&P 500 over the last few years, and you'll see the results are pretty impressive. And now jumping over to the UK, one fund which has done particularly well this year is the Aberforth Smaller Companies Trust. You can also find this on the most popular trading platforms, so whether you use Free Trade, Trading 212, Hargreaves Lansdowne or whatever, this one's not even behind their paywall. And I'll actually pop this up on the screen now for you to see. I searched for it on my free trade account. You can invest in it. It's not behind their paywall or anything like that. If you do want to join me on free trade, please feel free to use the link in the description below. If you do sign up and fund your account, you can get a free share up to £200. I'll get the one too. It's free money. What's not to like? Anyway, I'd love to hear your thoughts in the comment section below about smaller companies and small caps. What's your thoughts about them? Have you invested in any? Have you done any individual investing, or are there any interesting funds that I haven't spoken about today or ones that you're already invested in? Let me know. Anyway, massive big thanks if you've made it this far. Please drop me a big like if you found the video useful. Subscribe for many, many more if you're not already a subscriber, and I will see you in the next video. Happy investing.